the lesson that I learned from this is that when you don't have an edge in a market, you should not be trading. What's up, y'all, and welcome back to my channel, Watch Josh Trade, where I provide educational content in order to help traders like yourself find an edge in this market. And in this video, we're going to be covering my October monthly review. So let's get right into it. So you can see right here that SPY monthly return was minus 2.5%. QQQ monthly return was minus 3%. My portfolio monthly return was minus 4%, which is about a $2,500 loss. And this loss is, it's not great to end a month red ever, but I was not giving up my previous month's gain, which is good. And for the price action for the month and the way that I traded, I am actually surprised that I didn't walk away with a bigger loss. And I didn't walk away with a bigger loss because I had one good week, and we're going to cover that week later. But just going a little bit deeper into those stats, I had 11 green days and 11 red days. I'm not, even in a really good month, I'm not a trader who can trade 22 straight green days in a row. I aim for 75% green days, 25% red days, 3-to-1. I don't aim to have a red day, but that's a goal that I have, is to have that 3-to-1 ratio in my green to red days. And I aim to have a higher green day average than red day average. So on these green days in October, I averaged $676, and my average red day was $819. I wasn't able to meet that goal either. And I think that on these green and red days, I was not able to be consistently profitable because of the market conditions in October were quite different than the ones in September. In October, the market was very news dependent, headline driven market, where we had in the first half of the month a lot of stimulus negotiation talks, and in the latter half of the month we had a lot of election jitters, so to speak. And in this very news driven market, the price action was very volatile. The VIX was elevated between 25 and 40, and moves that looked like they were going to be breaking out actually ended up breaking down the next day. We had names that would have relative strength one day, and the next day they would all be red. And so it was a little bit way more confusing than September, where in September I said in my previous video I was able to make money in a choppy market because I traded relative strength names and I looked for my setups. In October, there was no relative strength names except for maybe in the latter half of the month, in the red part of the month. All the inflated names were getting sold off. People were taking profit in names that had relative strength in September, and so that in my playbook was difficult for me to trade around. I wasn't able to recognize the downtrend when it was happening. But to go back to the first week a little bit more in depth, I lost $2,000 the first week after coming off a good fourth week in September. And the thing that really messed me up in the first week, and we can just turn here to the charts to SPY. The thing that really got me in this fourth week, or the first week of October, was this little move right here. This move was when Donald Trump tweeted that he would no longer be considering any type of stimulus negotiation, and that they would have to wait, the Democrats would have to wait till after the election. And there was a lot of fear and panic that happened into that close. I was net long. I was actually pretty long at the end of the day. We were actually squeezing higher at the end of that day, and I had a good amount of positions open. And so when we flipped short and there was a big sell order that came in, I was waiting for a bounce to get, because usually we have a drop on news and we will bounce, and I was waiting for that bounce and it never came, and I ended up taking pennies on the dollar of my trades there. And to top that off, I ended up flipping short at the end of the day because I expected there to be at least some type of follow through the next day or during some part of the week on the prospect of there not being any deal. And you know, a lot of people, there were people on Twitter who were saying, oh, this is just like posturing. In the back of my head, I knew they were right, but I still put the trade on, and I ended up getting squeezed out of my position when we gapped up, and we didn't stop at the drop zone. We actually ended up gapping up even higher the next day with that drop zone providing support, and we gapped up literally 4 days in a row to complete that little sequence. And I was not actually able to take advantage of these 4 gap ups at all. The fourth gap up being on Monday, because I was not positioned correctly when we gapped up the first time, and I ended up stopping out of my trades once we broke the high of the drop from the Tuesday, I believe it was, or Monday. But I didn't want to chase a move that would potentially get sold off if there was even more news. Like, I just like was waiting for the hammer to drop on but the short squeeze lasted a good amount of time, long enough time where there could have been real money made. But the next 4 days, we actually ended up retracing, a healthy retrace, I thought, back to the 8 EMA, filling some gaps. It was something that everyone was looking for, and then we were looking for a lot of traders were looking for, out of this little retrace to the 9 EMA, for a type of cup and handle formation that would break out to at the high. People expected there to be continuation right here, and we didn't get any type of continuation. In fact, we went lower. But in the second week, covering the second week here, actually the second week was really good for me, and it was really good for me because 2 setups that I had been watching for quite a while. Just to pull up a couple examples here, I was watching Zoom and NIO. So NIO, we can see from the 13th here that I was waiting. I was in November. This is actually a typo. November 20th, 24 calls. And then I rolled those to 30 calls later on, and the setup worked quite well. I ended up making, there's the typo. I ended up getting around, around 200% on those later on, and I was able to reload on a pullback later on in the week, but that's later on in the week. The other setup was Zoom, where I was waiting for a setup for a push up to 560 from this little consolidation zone right here. And we were able to get to 560, and both those setups, both those flags broke on the same day, or the same week, the same period. And the only thing I did wrong on this day was I was not able to put a full amount of capital into both trades because they were both going at the same time, and they both ended up working exactly as I had anticipated, which is great on those trades when you're in sync with the stock, with the ticker, and it's doing it like level to level. It's doing exactly what you think it's going to be doing. Those are the trades that you should be pouring your capital into, not the ones where you're wrong in the first 30 minutes. So in these trades, I wasn't able to allocate enough capital, and I was able to make what should have been like a 5-figure week on this particular, because the setups worked almost exactly the way I had thought they would. So I felt good, after the second week, after being on tilt the first week, second week coming back and having these 2 great setups, it felt amazing. The third week, though, let's just review the price action here, because the third week I think I got a little bit frustrated with the price action, just going back to SPY here, because this is the price action. Let me just pull up the 1 hour chart. It might be a little bit easier to see. This is the price action in the third week. We had a sell-off on Monday, which for me, for my style, should have, for my levels, should have indicated that there was no longer going to be a cup and handle breakout, as many people were anticipating, because on Monday, what happens in a bull market, a lot of times money pours in, but when money comes out on a Monday, usually we're in a correction phase or a bear market. We're not in a bear market right now, but we are in a corrective phase. And Mondays and Fridays are good sign, like what happens Monday morning and what happens Friday afternoon. Like that's a good sign for where the institutional money is flowing. And if you look at the price action for this week, we ended up staying within the same range for the entire week. And it was so fresh. I was so frustrated with the week. It didn't reflect in my trading, but I was frustrated that I wasn't able to take like that. You know, when you sit at a screen for a while, you can get jittery and you can want to keep clicking buttons when it's not the right thing to be doing. And so I was just like, instead of clicking trading buttons, I was clicking the Twitter send button and saying, are the markets open? But anyway, after this, what in retrospect was a bear flag, we ended up having the worst week in October since March. And I was not ready for it. I was, despite my post analysis where we had a Monday sell-off, I was still looking to buy the dip. And I had probably my worst week since June in this last week of October. Let me just pull it up right here. Yep, there we go. Nope. I had the worst week since June. And the main problem was I didn't follow a trend. I kept doing the same thing 3, 4, 5 days, 4 days in a row, basically, where in the first 30 minutes I would look to buy and I would get stopped out after the next 30 minutes, because in a downtrend, you're going to have a little bit of a pop in the morning and then it's going to sell off for the rest of the day, or everything that's made in the morning session is given back in the afternoon, setting up for another gap down, etc. So that was bad, and I actually ended up having my PCR, my put to call ratio was 1-to-4, which means that for every put that I had 4 calls. So in the worst week since March, and for me, that's just a sign that I'm really out of sync with the market, that I was not reading things well, and I should have taken Friday off, and I didn't. And I think that my reflections after reviewing my trades for this month overall, especially the last 2 weeks, my reflections, the lesson that I learned from this is that when you don't have an edge in a market, you should not be trading, because you're going to be making your gains when you have an edge. And if your edge is not being played out, the market is not confirming your edge, the price action is not matching what you think it's going to be doing, then you're going to be giving back what you took from the market. And so I think that in this moment, I like to preach capital preservation in these moments when there's a lot of uncertainty, there's a lot of volatility, and you're not sure what you're supposed to be doing. The best thing is to not do anything. When you're not sure what you're supposed to be doing, the best thing is to not do anything. You're not supposed to be waiting out into the dark, hope and just shooting randomly in the distance. It's not going to have a good return. It's not a good long-term strategy for you. And so in these particular days, this week where we have uncertainty, especially the first week of November, I'm going to be very cautious, going to be looking, back testing to see if there's any setup that actually ends up playing out the way I think it's going to play out, and slowly easing into my positions after this election week. And I think that during the election week, I'm probably not going to be trading as much as I should not have been the last 2 weeks of October, because there's going to be a lot of uncertainty, and I just don't want to get caught with my pants down. So that's basically what happened for me in October. I would love to hear in the comment section what you did well in October. If you had a profitable month, what worked for you? If you had a unprofitable month, if you had a down month, what were you doing wrong? What lessons could you have learned from this month? I think I love reviewing my down months more than my up months, because I feel like I learn a lot more for them, because the lessons learned in a down month are replicable across all months, but whereas the lessons learned in an up month sometimes don't work in the next month over. And so my lessons of capital preservation, etc., are ones that I will keep with me into November and December. There was a couple setups that I played this month that did not work at all. Those mainly DraftKings. DraftKings was one that I was expecting to bounce, and you can see just pulling it up right here. I was expecting it to bounce at 45.46, and we got down into this level, and then we ended up, but that's the wrong one here. We ended up getting a hammer out of the level. Yep, and I said artwork on Twitter because it was doing exactly what I thought it was going to be doing, which is a good sign. But we continued lower the next day, and I think, you know, just on reflecting why this one didn't work out, I was waiting for it to work to get to the price where I could buy it at. But when we got to that level, every single person on earth who's on FinTwit was tweeting about the very same setup that I had been posting earlier. And I think there was just way too many people looking for a bounce. And when there's too many people looking that direction, it's going to go the other direction, like almost 100% of the time. And so I think it was just too crowded for it to work. At some point, it's going to have to bounce. But for now, we've just been going down in a straight line. So, I mean, it's really odd for a stock to not bounce where DraftKings did not bounce. Let me just put it that way. Very, very odd. Stocks usually react in supply zones. Usually there's people waiting to buy the name, and yet there's somehow, some way, a ton of institutional selling in the same. It was a little bit confusing. Other setups that slightly worked was Grow Generation, a name that I've been really keen on. I was able to observe that there was a hanging man on Grog. That's how I pronounce it in my head. I don't know. And so I was able to take most of my profit off at 20, and good for me because the next day was down 14%. So I still feel in sync with Grog. I feel in sync with NIO. I feel actually in sync with Zoom still, despite the fact that it sold off since 450. I still am seeing the price action well. I feel in sync with Tesla, but with every other name in the market right now, I don't feel in sync. So I'm going to be looking at those names in particular going into November, because those are names that I feel like I have an edge in trading, that I'm able to read the price action, read the tape, etc. If you like this video, please leave a comment. You can follow me on Twitter at watch.trade, where you can see callouts, setups, and trades that I'm posting in real time. Hit the subscribe button on this channel if you want to see more content. I would really appreciate it, especially if you made it this far. Thank you so much, and I will see you soon.